Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, September 24th of 2020. There's a lot of topics moving the markets we're paying attention to. We're going to report on them because you might not get them in your nightly updated news cycle of the day. So let's get right to the topics of the day. Our first topic of the day, we had August new home sales number. Absolutely crushed it. 14-year high for the month of August. It takes the builder's inventory down to a 3.3 month supply. So that means that supply and demand, it's happening again. So the demand is super high, supply is super short, prices are jumping up, and this is about 400,000 fewer homes in just that 1 month in terms of what has been absorbed based upon demand. So this housing trend, I talked about housing earlier, of existing home sales earlier this week, new home sales, even a hotter report nationwide as it just been reported. The home builders specifically as industry have continued, they can't keep up with the demand. That's also putting price and pressures, inflation pressures within the housing, anywhere from the lumber markets to the labor markets, ultimately going to track into the GDP for the third quarter. Federal Reserve Representative Bullard said earlier today he's looking at a 35% print on the third quarter GDP, which is a huge number. Again, if you recall, follow me on my daily updates, I went ahead, outsized most of the economists prior to what Bullard said, and I did say we're going to see a 30% GDP plus in the third quarter. And we're going to get that report October 29th, right before the election itself, which is going to be interesting. Why is that important? Because right now we have real-time empirical data like housing related, existing and new, that are just on fire, and that's going to buoy the market or the GDP. It's going to feed right into that number. So when we look at that number later on at the end of October and say, what happened? This is what's happening at this moment in time. So supply and demand, interest rates are still keeping an all-time low, and that's just fueling this frenzy right now that people are working from home and they're looking at their existing working spaces and saying, hey, let's redo our home itself, or let's trade up. And we're seeing that trend continue. So that's a positive for the U.S. economy. Our second topic of the day is never bet against, I'll let you guess. 1 second here. Think about it. Never bet against the U.S. consumer. We're seeing that play out. Let's look at the U.S. personal savings rate. Now, when the CARES Act was passed earlier this year in Congress, added fiscal and monetary policy from the Fed, they added $7 trillion by way of additional stimulus, both working together. I refer them, if you follow me, as mom and dad savings and loan. But the money that was sent out, $1,200 checks to those that were at home and in need, as well as the unemployment insurance and the enhanced unemployment insurance benefits, those expired July 31st. We're looking for Congress hopefully to pass another 2.0. At least that's what the market's looking for, more strategic in the services industry that's needed. And hopefully let's not hold our breath, because that might be dangerous if we wait for Congress to do this, but the market's looking for this, right? But let's look at the history right now, most recent history of when Congress did this and deployed all this helicopter money, if you will, into the U.S. economy. What happens? Well, the personal spending rate, as it's been reported in January of this year, is $1 trillion altogether. As soon as they deployed those funds and got those funds, PPP or PPE, and all this stuff into the hands of the U.S. consumer by small businesses as well as personal consumer, that ballooned to $6 trillion, okay, in the end of May. Now, in the most recent June reading, we went back down to $3 trillion. So that means that $3 trillion has worked its way in to the U.S. economy, okay? Hopefully on those things that they needed to do. Obviously, we're thinking about that. Those dollars that were deployed were for those who needed it the most. So they're using groceries and rent and a few other things. But there's also a good portion of the economy that actually had some personal savings as well. So they're doing some other spending. That money is making its way into the U.S. economy. How do we know? We're looking at corporate earnings. There was a famous shoemaker the other day that just reported earnings, I believe it was yesterday, and they crushed it. They had outsized earnings. Their stores are not open. People are buying online, and they know they have a strong, loyal consumer brand, and the sneakers are $150, $200 a piece. So this is coming from never bet against the U.S. economy. So economists know this for sure. If you give $1 to the U.S. consumer, guess what's going to happen? It's not only a multiplier effect in the U.S. economy because they go out and spend. So that means that business has to have somebody to service them. But on the other side, like the supply chain of actually reordering and everything that goes around in terms of that consumption, right? That being said, they know that the policymakers know if you give that dollar to the U.S. consumer, and our economy is 2/3 U.S. consumer driven, right? By spending, they're not going to hold on to it. They're not going to save it. So don't be alarmed when the $3 trillion starts dwindling, especially around Christmas time, I would imagine. This number is going to go down. That means it's going to work its way into the economy. Keep in mind the third quarter or the second quarter GDP and the end of the first quarter GDP, we needed a gap stop, right? Markets needed to come in terms of trillions of dollars, the Federal Reserve. And they did, and Congress did. Well, the formula played out, and never bet against the consumer in the U.S. because you give them the dollar and that money works its way back in the economy. Corporations are actually making money. And that shoemaker, if you will, was just 1% lower in their earnings year over year, same time last year. That's remarkable. And that's not a tech company, right? So there's other sections and factions and industries in the economy that's actually doing quite well, almost not only surviving, but thriving in this sort of lockdown economy based upon this pandemic. So we watch earnings, we watch the consumer. That all relates into why markets are up, and they will persistently in a long-term secular bull market because the U.S. consumer is that underpinning, unwavering, sort of capitalistic consumer that's going to fuel the economy going forward. So keep an eye on them, very important. And let's look for the CARES 2.0 Act because that's going to actually work its way back into corporate balance sheets as well. So that's the second update of the day. And our final topic of the day, we're excited to announce that we have a special Election Edition 2.0 next week. I have a national call with a special guest, Stephanie Link. Stephanie is with us now at HighTower. She's our Chief Investment Officer, and she helps all of our partners across the United States with HighTower. But better yet, you can get Stephanie, you can see her on CNBC just about every other day. She's basically in the Closing Bell. You could see her on Mad Money and a few others, but she's a contributor there. But she's with us now at HighTower, and we're going to have the opportunity to have her with us on September 30th at 12 noon. So it's a national call. We'll record it if you can't make it, but please sign up. But better yet, think about this, September 29th, so the night before, we're going to have the first presidential election debate this year. And that's scheduled the night before the next day. So our next day conversation could be very, very interesting to say the least. Now, keep in mind, we had one 2 weeks ago with First Trust, Robert Schein, and we had over 35, 40 people joined us for that call, and it was a well oversubscribed call, and we appreciate that. But a lot has changed just in 2 weeks. That's why we're going to do this again. And think about that. I mean, we had the Supreme Court now is in play. We have a debate that may or may not go on. There's some talk right now, politically speaking, that one of the two parties may back out. So we're going to see. But if we have the September 29th, it's presidential debate the night before our September 30th call with Stephanie Lake at 12 noon. That's going to be exciting. So tune in. We want you to like, subscribe, and thank you for following Blanke Schein Wealth Management. And this is sure to be something you don't want to miss. Thanks for watching.